Joining us now is Sunnova CEO John Berger. John, welcome. So I want to get to all that, but I want to start on debt because you've impressed some investors for the way that you've been able to grow. You've also, over the last recent months, taken on additional debt to do it at a time when interest rates are high. So talk with me, if you will, about how you're able to be sure to deploy resources in a way that are going to end you up on the positive side of the ledger there.
Well, certainly, John. Thanks for having me. When you look at our history, which is now over a decade, we've done a fantastic job of making sure that our balance sheet is very conservative. And so we watch our leverage ratio very closely. And we've done a lot of what they call asset-backed securitization. So these are asset-level debt entities. We actually just priced another one last week. And these are all non-recourse facilities. Of course, that doesn't really matter. Debt is debt at the end of the day, practically speaking. And we have a very low default rate because we're selling a necessity, power, more affordable power, more reliable power, more cleaner power to consumers. So even in a recession, we feel very confident that those cash flows will continue to come in at above expectations of the marketplace. We do raise equity, as we did recently, just a small amount, but we do have other forms of capital that come into the capital stack as well. So we're sitting very nicely. We've locked out a lot of our debt, like that asset-backed securitization, even our corporate debt. So we feel very comfortable about where we sit right now, and we're in a nice driver's seat.
So how is the sales motion changing when you're making the argument, I guess, to homeowners? Hey, take on this equipment, will help save you money on a sort of month-to-month basis and maybe even be able to sell some power back to the grid.
Absolutely. So when you're looking at utility rates, I think there's a number of investors and people that think that for some reason, mainly, I guess, natural gas pricing coming off so much, that utility rates are going to decline. But this is why utility stocks have for decades traded with interest rates, because the other thing that goes up with interest rates is utility rates. And so there's a lot of inputs. So when you're looking at the Maui fires, that's another, in terms of climate change, another input that's pushing rates up on these electric utilities across the country. And so we don't actually see that there is going to be much of a drop, if anything, in utility rates next year. And I would highlight that having inflation, where some people think that that's going to rip even higher, it may or may not. But having inflation rip higher and utility rates go lower has happened exactly 0 times in the United States history, 0. So we see a lot of people coming in as they start to have problems as the economy gets more difficult and inflation still lingering there, particularly in utility rates, and looking for more affordable power, more reliable power, and that's what Sunnova offers. And so we're seeing our sales move up. We were quite confident in our sales. We're clearly out executing everybody in the industry, and that was evident on the last quarter's call. We called for 40% growth next year when people are struggling to even grow in this industry and other parts of the economy for next year, and we're already booking into next year. We're very confident of that growth. We're doing extremely well on the execution side.